Okay, yeah. There's so much construction going on in my building. So hopefully you won't hear a lot of noises. All right. But this is so far, all right, what we have been doing. Okay. So if you look at the screen right here, all right. I hope you still remember. We just did the first half of it. All right. So we did the top half of the ratios. But I just want to hear from you guys. See if you still remember, some concept from the ratios. Well, let me just ask some people. How about Arabella? Arabella, can you hear me?
Yes.
Yeah. I'm just gonna ask you a very quick question. Do you still remember like what liquidity is? Yeah, like here. Can you just quickly, you know, tell us what that is? Yeah.
Firm's ability to repay its short-term liabilities.
Oh, that's very good. Yeah, that's actually very good. Okay, it's just the ability for any firm to repay short-term liabilities. Okay, using their liquid assets, and then we have the two ratios to help us understand this. And well, let us have Bernice. Are you there, Bernice? Hi. Oh yes, Bernice. Can you tell me the two items that we would use to find out current ratio very quickly? So when it comes to well, for current ratio, the two items that we need in order to come up with the ratio. Yeah, because now we are talking about liquidity. It's about how we can repay short-term liabilities using liquid assets. So what are the two things that we need in order to calculate the current ratio? Are you able to do that? Oh, don't worry. So Bernice, did you hear the question that I Oh, okay. All right. Yes, but can you make it more specific, please? I mean, you're right about the items, but even when you look at assets, when you look at okay, thank you very much. Right? Yeah. So there you go. Okay. So for current ratio, we look at like current assets, and we use it divided it by current liabilities, and that's how we can find out. All right, for each dollar of current liability, how much current assets that we have in order to pay off the debt, okay, the short-term debt. All right, but make sure at the end, when you are expressing this ratio, it has to be in this format. All right, it's something to one. Okay, all right. Yeah, I think we all understand what that one is based on what we have learned. Okay, but what about Megan? Megan, are you here? If you can hear me, can you give me a very simple answer? So if current ratio is using current assets and current liability to find the number, what is the major difference when we are looking at quick ratio then? Oh, Megan just left.
Sorry, my
Oh,
Wi-Fi just lagged.
no worries, Megan. Did you hear the question?
I didn't hear it, sorry.
Oh, no worries. Yeah, I was just asking. If this is what current ratio is all about, then what's so different, about quick ratio then? Can you give me one very distinctive, difference, or one distinctive thing that we would look at when it comes to quick ratio?
You also minus the inventory.
Oh, okay, yeah, Megan, that's very nice. But just one more quick question for you. How come we have to minus that inventory? Are you able to like tell us the answer? So yeah, you're right about it. So we're using current asset minus inventory, right? And that's how we can come up with yeah, the quick ratio. But here, guys, anybody who can tell us why we have to minus inventory? What are we trying to look at here for quick ratio? Anybody? Yeah, any volunteers, you can just put your answer in the chat, or you can just say it out if you still remember it. Oh, Jasmine. Inventory takes a long time to convert into cash. Yeah. So that's a very good answer, Jasmine. Thank you very much. And therefore, even when you're trying to get a ratio like this, sometimes you want to minimize your bias. Okay. All right. Yeah. Just because you're using current asset, it doesn't mean that all the current asset they can be converted into cash immediately. So if you would like to avoid this, like a bias or like subjectivity, then you would like to use your current asset minus the inventory, so you can get a rough idea. All right, the remaining part of the current asset, they will be the liquid assets, and therefore by using that, when you're looking at the quick ratio, you will have like a better picture. Okay, all right, to see liquidity in a firm. Okay, all right. So that's pretty much what we have learned so far, and then now we are going back to the next part about profitability. Okay, all right. Yeah, I think we just started profitability, for the first item here, and we talk about gross profit ratio. Okay, so if you can get your booklet at your desk, then we can start from here. Okay, all right. So guys, I hope you still remember what this is all about. All right. So when we talk about profitability ratio, we always try to find out how profitable a business is when they are operating their business. Okay. All right. And the first thing that we can look at is to look at, based on their business activity, okay, how profitable they are. All right. If we just look at their business activity without looking at other different aspects. Okay, all right. So if you look at this equation here, you can see we are using gross profit over sales. Okay, we're using gross profit over sales, which means right here, okay, we're just trying to look at the proportion of sales that will eventually become gross profit. Does it make sense to you based on the equation? Yeah. Right? Okay. Yeah, because it doesn't really matter how much sales that we have, because if we have a really high cost of goods sold, let's say right here, because this is how we get the amount of gross profit, then you're not earning anything. Okay, you're not earning anything, right? Because profit is what a business is looking for. So therefore, sometimes we do look at the proportion of the sales, like how much of it is really the profit at the end. Okay, so if we are able to understand this idea here, okay, all right, then we can come up with this equation, and we can simply answer different questions with the numbers given. Okay, all right. So if you have your booklet with you, I just want you to quickly finish this question here. Yeah, the example question. All right. So when you look at the question here, at the end of 2017, the company has $10,000 sales, and then $2,000 gross profit. After deducting cost of goods sold. Okay. So can you guys tell me the answer very quickly? So if we are looking at a GP ratio here, okay, all right, what is the ratio? Yeah, I think you don't even need a calculator. So if you already got a number, can you put it in the chat, please? Okay, Alex, thank you very much. Yeah, so exactly. All right, 20%. Okay, 20%. All right. So here, make sure they have another format for profitability ratio. Okay. For liquidity ratio, it's always something to 1. But for profitability, we always use percentage. Okay, all right. So if you are already aware of this, then you can just finish your working here. All right. So we have our gross profit, which is $2,000, and then we have our sales, which is $10,000. Okay, all right. So which will give you 20%. Because at the end of the day, you're gonna make it back to percentage. All right. So if you use the number here, okay, times 100, then you will get 20%. Okay, 20% here. Yeah. All right. So can someone answer this question here? And therefore, for every dollar of sales, what is it? What is it right here? Come on, guys. 0.2. Okay, Karina, Chloe. Yes, that's right. So 0.2 for every dollar of sale. Okay, you earn 20 cents. 20 cents as gross profit. Okay, all right. So I hope I hope it makes sense to you. Okay, right now, all right, because this is how we look at a profit by using ratio. Okay. So once we got the idea of a 20%, then we kind of understand, all right, for each dollar that we sold to our customers, okay, we earn 20 cents. All right, okay, all right. So you can you can make some reflection, or you can make some analysis. How I can make it even better. All right, how can I improve the gross profit ratio? Okay, well, in general, if you are able to reduce the cost of goods sold, then your gross profit ratio should go up, all right, quickly. Okay, all right. So there you go. So yes, so it's just like that. That's simple. Okay. Warren. Okay. COGS, cost of goods sold. Okay. All right, Warren. So basically, it is it means the cost of the goods that you sell. Okay, all right, yeah, basically the cost of the goods if you are reselling it. Okay, all right, yeah, cool. Are we all good? Yes. Okay, all right. So there you go. Right, and sometimes when you're thinking about different goods, because that is why using percentage is so much more important, because you cannot just look at the absolute value itself and see if you are earning like so much or so little. Okay, all right. So let's just say there is a banana here. Okay, all right, and the cost of buying one banana, or buying banana. Let us say the cost of buying it. All right. It's just, let's just say $1. Okay, all right. And you sell it, and you just sell it at $10. Okay, all right. So, all right, guys, can you help me come up with the GP ratio for bananas in this case? Yeah, so guys, if you have got the number, I want you to put it in the chat. So for the case of bananas, all right, if you are being given the numbers here, what would you say about the GP ratio? At 90%, Owen. Yeah, that's very good. Okay, all right, yeah. So there you go. Yeah, but come on, you have your cost of buying, which is your cost of goods sold, and then you have your sale. So basically, you are able to find out, all right, using 10 minus 1, which is your, $9, and that is your GP. Not global perspectives, but gross profit. And then you use your, right, okay, gross profit over the $10, which is your sales, all right? And then you are able to find out, all right, yeah, wow, basically, okay, for each banana that I'm selling, okay, each one that I've sold, okay, the sale itself 90% of them is all my profit. So which is a very big profit. Okay, all right. So 90%. So that's very good. If you convert it into, like an expression here, so for each dollar of sales, well, you earn 90 cents as gross profit. That's a lot. That's basically, like a total profit. Yeah, every time when you're selling one. Okay, all right. So that's very good, guys. Okay, all right. So there you go. That's just gross profit. Okay, all right. Yeah, I hope it makes sense to you. And is there any questions before we go to the next part? For gross profit, yeah. So for gross profit, we just focus on the business activity itself. Okay, all right. How profitable when we only focus on the business activity. Okay, all right. Yes, right. But you know that is not the end of the story, because just when you are earning gross profit, it doesn't mean that at the end of the day you are still having profits. All right, because when you go back to our equation, I'm just gonna go back to it very quickly. Yeah, so this is what we have come up like weeks ago. Okay, when you look at this equation here, gross profit is just the first part of your like an equation when you're trying to find your profit, and you still have to think about other revenue that you may have in your business, and then there will be some other operation expenses that occurs every month, every day in your business. So at the end of the day, you will find out, okay, all right, in general, net profit, which is how much your business earns as profit. Okay, all right. So therefore, if you already understand this concept here, then we have another ratio, and we call that net profit ratio. All right. So net profit ratio is it's very similar to gross profit ratio, except it will give you a clearer picture. Okay, a clearer picture to find out the general performance of a company, because now you don't just focus on the business activity itself. You also focus on other things that happen in your operation. Okay, all right. So with that being said, these are the key words. Look at this. All right, look at this here. All right, it measures the overall operating performance of your company. Okay, all right, because you also take care of other revenue and also operation expenses as well. Okay, all right. So if you look at the formula, it's very similar to gross profit ratio, except for your numerator, you're gonna use your net profit. Okay, all right. So you're trying to look at for every dollar of sale, okay, how much are we actually earning as net profit? All right. So here, yeah, the key concept right here is you are able to see a bigger picture using net profit ratio, because you're considering more items when you are using this ratio. Okay, all right. So, but here I have one very simple question for you guys. If I want to increase my net profit ratio, can you tell me what items should be changed and how they should be changed in order to improve my net profit ratio? Okay, less cost of goods. So, okay, Chloe, that's nice. Can someone else give me something, some other items besides? Okay, so here I'm going to put it here first. Okay, cost of goods. So if it is going down, then my net profit ratio should be going up. Is there any other things that I have to consider? So I will get a bigger number of net profit ratio. Come on, guys, you can do it. All right, go back to the equation of your net profit, and then you will find some other items. Less daily expenses. Yes, that's very good. Yeah, Suzette, that's very good. All right, less. Okay, if your operating expenses, yeah, I know, using the mouse to write is difficult, but there you go. All right. Yes, right. If you are able to reduce your operating expenses, net profit would definitely go up. So here, the key thing to give you an idea, all right, is that you're trying to do something so that your net profit will go up. Can someone else give me one more thing? Oh, robbing. That's a very good idea, even though it's illegal. Alex, thank you very much. Megan, that's very cool. Okay, yeah, I know. Pokemon card. Hey, you know what, Alex? The other day I just saw a lot of Pokemon cards. Like someone just dump it on a street or something, which is such a waste. Yeah, I mean they are some they are some very good Pokemon cards. Just at my age, I'm not very into those cards anymore. Otherwise, I would just pick them up. Yeah. Anyways, okay, gross profit more and increase other revenue. Yeah, that is so true. All right, guys. That's so true, and I'm just gonna add this here as well. So, guys, thank you very much for the contribution. And so if other revenue is also going up, right, then your net profit should go up. Or yeah, like Chloe mentioned, even when your gross profit is going up, well, basically when gross profit is going up, which means it's either the cost of goods sold going down, or when you have more sales. Okay, all right. So, but if you are such a rigid person, okay, sometimes when you look at the question, then I hope this will help you as well. Okay, all right. Yeah. All right, yeah. So I think we've got everything. Yeah, and okay, all right. So guys, if you look at the second example, all right, you will see the question is exactly the same as the first example. Okay. But here we have one more clue. Okay. So is that $500 has been occur for the operating expenses. So now can you guys tell me the GP, not the GP ratio, the NP ratio for this example question? What is the NP ratio? Can you guys very quickly help me calculate this? NP ratio for this. Anyone? Come on. You can do it. So how much have you got for the net profit in this question? Anybody? Hello? Oh, Owen, yeah. Exactly. It's 15%. Yeah, it's 15%. But what about the others? Come on, guys. I'm pretty sure we can have more, contributions from other people. Come on, some other people. If you haven't spoken yet, okay, you can tell me. All right, what is the amount of net profit in this question? But we all know the sales is just the same as the last one, which is $10,000. All right, yeah, Chloe, thank you very much. Yes, so for our net profit, we just have to use our gross profit. Where is it? $2,000. Okay, right here. Minus the operating expenses, which is 500. Because you don't see any other revenue, so you can just treat other revenue as 0. Okay, all right. So once you have got the idea right here, then at the end you just have to multiply it by 100, and then you will find 15%. Okay, 15% right here. Okay, so for every dollar of sales, okay, if you consider net profit ratio, which means 15 cents. For every dollar of sales, you earn 15 cents as a net profit. Okay, all right. So it will give you a bigger picture to see when you're running a business, when you're selling something. Let's say Pokemon card. Okay, all right. What is the final profitability when you also consider other revenue and also other expenses? Okay, all right. Does it make sense? Yes. Are we all good? Okay, so far so good. Yes. Okay. All right. Okay, yeah. If you see any questions, just feel free to raise out. Okay, the questions. I'm more than happy to stop it and then explain a little more. Okay, all right. Yes. So, but now let's move on. All right. So, when you look at a gross profit ratio or net profit ratio, I think they are quite straightforward to understand. But here, let me introduce you with one more thing. Oh, okay. There's one question. Do these ratios have a point where is concerning for the business? Okay, Alex, that's a very good question, actually. Okay, all right, yeah, I like questions. Alex, usually this is how we can find the point, the so-called point. Again, we are gonna do comparison, like right here. Okay, and if you're really looking for a point, usually we would go for this comparison here. Okay, all right, you're using your company when you see a percentage, let's say your GP ratio, comparing it to the industry average GP ratio. So if you are above, the industry average, well, which means, you are pretty good yourself. Okay, all right, yeah. So that's one simple way to find yourself a benchmark, shall we say? Okay, all right. So I hope it helps you. All right. So there you go. Okay. Even when you're looking at your exam question, sometimes they would give you the industry average, and then you can compare your finding with the industry average, so you can make analysis. Okay. All right. So guys, something that you need to pay attention to. Okay. All right. Yeah. You need to provide implication for your exam papers. All right. Okay. All right. Okay. So that's very nice. Well, I'm just going to introduce you with one more because that's going to be the last one. All right. One more, and then we are done with ratios. Yeah. So quickly. All right. So the last one is a bit tricky because even when you look at the term itself, it's called return on capital employed, or simply you can call that ROCE. Okay. All right. Yeah. So this guy right here, basically. You are just looking at, okay, for every dollar of investment that us, as an owner, all right, we have invested, how much return we are getting at the end. Yeah, does it make sense to you? Okay, because this ratio here is is focusing on the owners. Yeah, it focuses. Oops. It focuses on the owner's perspective. All right. I hope it will make it more understandable. Okay. All right. Yeah. For GP ratio, for NP ratio, they are looking at business. Okay. They are looking at the business, but here is more focus on the owner, because at the end of the day, you as an owner, you have your business, but what is the ultimate goal of having a business? Of course, you want to get more return, and this ratio, it helps you to find out how much return that you are getting based on the amount of investment that you have, okay, in the business, and there you go, guys. So here, when you look at the equation, okay, you're using the net profit over the capital employed, because for capital employed, this one here, capital employed, is basically how much you have invested in the business for the long-term operations. Okay, if you still remember the definition of capital employed. Okay, yeah, it's just the money, it's just the amount of money that the business they are using for long-term investment. Okay, all right. So if you are using this equation right here, you can find out whether or not the money that you have put into investment, they are worth for something. Okay, because for some businesses, when they are running it very badly, okay, it doesn't really matter how much investment that you have put in the business, because turns out it's not doing well. Okay, all right. But here, when you're looking at this equation, you can find something meaningful. Well, let's try to do it, and then you understand it very quickly. Okay, all right. So basically, if you look at this equation, and then you look at this example here, all right. Look at this. So let's say at the end of 2017, the company has 1,500 net profit. So here you can directly apply this number into the numerator. Simple. Okay, all right. But when you're looking at capital employed, okay, you always look at these two items. I know they have so many items, and sometimes you just have to memorize, okay, how you can calculate, okay, capital employed. How do you define shareholders' equity and also non-current liabilities? Okay, all right. But yeah, they are all for long-term investment. All for long-term investment. Yes. Okay, all right. So, if you are looking at this, can you tell me, based on this question, how much is the capital employed? Can you tell us? How much is the capital employed? Are you able to find out? Well, do you want us to, go through the items one by one? So for long-term loan, which account would you put it into? Can you just put it in the chat very quickly? Okay, all right, that's very good. Yeah, non-current liabilities. So which is here? Okay, all right. Yeah, but what about share capital, guys? Share capital, where would you put it? Do you still remember what that is? Can someone answer this? Share capital, what are we referring to? Nope, cannot remember. Well, I mean, let's just say share capital is how much the owners, okay, the owners, they have invested into the business. Okay, yes, all right, yeah. So if you put it simply, it's just how much the owners, they have put money into the business. All right. So if you understand this, then you will put it in your owner's equity or shareholders' equity. Okay, all right. And if you think about the retained profits as well, because this is the amount of money. Eventually, it will go back to the shareholders or the owners, and then they will use that money for reinvestment. So this is for reinvestment. So if you know about this already, then this one here is also our owner's equity. Okay, all right. Yes, right. Okay. But there's one question here, guys. How come you see two variations of the terminology here? It can be either owner's equity or shareholders' equity. So for owner's equity, when are we able to apply this in our business? What would you say? So for what kind of business organization would you call that owner's equity? Owen, but owner's equity, which means there's no shareholder. You know what I mean? But when you look at private limited company, as long as it's a limited company, then you have shareholders. So, for owner's equity, it applies to which business organization? Come on, guys, you can do it. Come on, yeah, come on, you can contribute a lot more. I mean, you don't need me to always call out people and then do answering. Are we able to do this? Hello, anyone? Okay, yeah, thank you. Yeah, Soul Trader, and well, we have one more. Guys, do you remember the other one? The other one that we don't really have shareholders, just owners. Thank you very much. Yeah, so Soul Trader. Soul Traders or a partnership. Okay, alright, partnerships. Yeah, you can see everything that we've learned. We can actually link them together. Okay, alright, and for shareholders, it's basically any forms of limited company. Okay, limited company. Yes. So so when you are in the exam, make sure you use the right terminology. Okay, alright. Yes. So there you go. So if we already understand how we can come up with the capital employed, okay, so we can just add them together. So 6,000 right here, plus 2,000, and then the 4,000. Can you guys tell me the percentage at the end? So how much did you get? How much did you get? Okay. All right. Yeah. Thank you very much. All right. Yeah, Kenny. 12.5%. All right. 12.5%. Right here. Okay. That's cool. All right. So can you all answer this question very quickly? So for each dollar, when the owner they have invested, how much would they earn from the net profit? So does it make more sense to you now? So for every dollar that you have invested into the company, so now based on the percentage, you are able to find out the answer. Right? Yeah, I think it's that simple. Okay? All right? Yes, you can say so, Kenny. Okay? So you're earning 12.5 cents for every dollar that you have invested. All right? Okay? So you get a rough idea. So if I do that, what will happen to me? If I invest money into the business, what will happen to me at the end? Okay? All right? So, and then if you see here from below, okay, sometimes they will give you the industrial average, even for ROCE. Okay, if the percentage for the industry is 11%, and then now you have 12.5%. Okay, obviously, okay, the return of the owner is higher. All right, definitely higher for that company compared to the average competitors. Okay, does it make sense? Yeah. So if that is the case, I just want to ask you guys a very simple question. What do you think will happen to the existing owners? What do you think they would do, or what's in their mind if they see, okay, now we're having 12.5% compared to our industry 11%. So yeah, what do you think, guys? Because at the end of the day, you may have to provide some feedback for your exam. So when you look at the two numbers here, you get 12.5% and then you get 11%. So anything that you can tell us? No? Not really? Come on, guys. Well, yeah, Owen. Yeah, that's very good. That's actually a very good answer. Okay? Because you realize, right, you are actually having a very decent return when you invest money into the business. So, you may have a bigger incentive to invest more. Does it make sense to you? Yeah, because this is where we're focusing. Okay, it focuses on on the owner's perspective, right? For every dollar that I've invested, I'm earning 12.5 cents as net profit. And if you compare this to the average, like a number in our industry, we are a bit higher. Okay, so it gives us the kind of confidence. All right. Yeah. So the owners, they will have bigger confidence, and yeah, maybe I should invest more. The more I invest into this business, the more I can gain at the end. So how nice is that? Okay. All right. And it even applies maybe to potential investors as well, right? Because sometimes when people, they are looking at your business, they want to think about, okay, whether or not I should invest in this business. Okay, because at the end of the day, we are all rational. We only look at our own benefits. So if you see, when I invest into this business, okay, I can actually get some decent returns, then maybe I should put my money into this business and see if I have the luck, all right, in the near future. Okay, all right, does it make sense? All right, so there you go. So that's basically what ROCE is. Okay, all right. Any questions for ROCE? Are we all good? Yes, we all good. Okay, all right, all right. Okay, that's nice. Okay, so before I give you a break, okay, if you go back to the GP ratio and net profit ratio, you can definitely tell net profit ratio is usually lower than gross profit ratio. Okay, because you also minus the operating expenses. So based on the two cases here, one is 20 and then another one is 15. All right, because it also consider the 500 as the operating expenses. Well, of course, you can argue if they have more other revenues than the operating expenses, well, then your net profit ratio should go up. Okay, all right. But in general, you as a business, you won't have that much of an other revenue. Okay, all right. So normally, this is what you would see. Okay, all right, and it will give you some implication. All right. If there's a huge gap between GP ratio and net profit ratio, it tells you one thing. What is that one thing, guys? If there's a huge gap between GP ratio and net profit ratio, so let's say GP ratio is 20%, but net profit ratio is 1%. What does it mean? So this is something that you may have to explain in the exam as well. So anyone can try answer this question? Anybody? So like GP. Maybe there is a little cell. Well, but you know what? If you're using the same case, okay, then you always consider the same amount of cells. All right. So the reason why, okay, all right, yeah, Melanie, yes, yes. So this is what we are trying to look at, right? Exactly. So if we have an example like this, okay, yeah, like EG, for example. Right? Yes. It usually means that you have a huge operation expense. Okay? Huge set of operation expenses. All right? A business may incur, all right, a huge amount of operating expenses. Okay, all right. Because the only difference between GP ratio and NP ratio is that NP ratio you also consider other revenues and operating expenses. So if you're using the same case in the same company, okay, so if you see a huge difference between the two numbers, basically it means this. Okay, all right, yes. So there you go, and I'm just gonna put it here. Yes, all right. So that's the implication. Implication. All right. So make sure, guys, you need to start thinking like this. All right, when you look at like two sets of numbers, what kind of implication do they give you? Okay. All right. Yes. So there you go. All right. All right. So that's basically all the ratios that we have. All right. Is there any questions before we take a break? Yeah, because I'm gonna give you a Kahoot. All right. After the break. So if you guys would like to form in groups, using Discord or whatever means that you have, well, be my guest, okay? But I'm gonna give you 4 minute, a 4 minute break, and when we come back from the break, then we'll do some Kahoot. Yes, and you may need a calculator for this Kahoot. Okay, all right. So yes, if you don't find any questions, you can take a break, and I'll see you guys in 4 minutes. Okay. Oh, by the way, guys, if you feel like asking question right now, it's okay. All right, yeah, feel free to ask question. But yeah, I do want to say it again. This unit, some people, well, not some people. Normally, majority of the people, they would think, finance, this unit is the hardest in the curriculum, but actually is not, because it's so rigid. When you look at the pattern of how we answer all these questions, there are sets of rigid answers that you can basically memorize. Okay, even though you may not understand everything. So with that being said, finance is actually kind of simple. Yeah, as long as you are able to find out the patterns. Okay, well, I'm going to show you the patterns very soon. Just want to tell you guys that this one here can be one of the the simplest units of all. All right, because there's no flexibility. Okay, all right. So when you see like different numbers, and when you're comparing them, you only have a few options. Okay, it's either A or either B. Okay, all right. There will not be other answers. Okay, all right. So very soon, yeah, I'll show you that. Right.